Let's go straight to Probal Sen, Equity Research at ICICI Securities, to discuss the quarterly performance of Reliance Industries. Thanks so much for taking time out. Given that it has been an inline set of numbers, that's how we're categorizing it, particularly in the gas exploration segment. How would you categorize RIL's earnings?
I think, yeah, as you said, the earnings were fairly strong, but in line broadly with what the street was looking at. I would think that probably the OTC segment disappointed marginally. The impact of the shutdowns was baked into the estimates, but to that extent, I think the margin pressure continues to be there, specifically in the petrochemical segment. So to that extent, there was a slight miss there. I would believe that I think the retail performance and the upstream performance, specifically on the production front, was probably a bit ahead. So one sort of offset the other. And that's the benefit you have as Reliance now has the kind of business mix that it does, where, performance in several segments can actually offset weakness in any one particular segment in any particular quarter. So to that extent, I think the numbers were fairly strong. I would be a little bit cautious on the fact that net debt continues to actually rise, despite the fact that capex actually declined quite sharply on a QOQ level by more than 25 odd percent. Despite that, the net debt has continued to be flattish, or actually has even risen if you look at it from a YOY perspective. So to that extent, I think the monetization of the new energy businesses, which has been mentioned that the first of these facilities will be commissioned by the end of this year, I think that plus any tariff improvements that happens in the digital services business because of enterprise and fiber to home gaining traction, and at certain point of time when they start to monetize the 5G investments that they have done, I think those two will be big triggers to look forward to, because those can actually improve free cash flow yield and return ratios, which probably continue to be the two main factors that worry us a bit from a stock performance perspective.
Specifically, I want to talk about individual segments, Prabal. And does it come as a surprise or rather a disappointment that retail was at best only in line? Because retail is where you're seeing some very aggressive expansion coming in when it comes to Reliance.
Well, I don't know if I would call that disappointing. It was still a 23% growth in YOY in revenue, and I think close to a 30% improvement in EBITDA. The fact that it is already baked into the estimates is something that you can attribute to the fact that that optimism is there on the street as far as the performance of their retail segment is concerned. So on retail, I would say that yes, the Cape, it comes back to the point I made earlier, that you are actually continuing to spend a significant amount of money or capital in each of these businesses, which is delivering earnings growth. The issue is going to be, when does that inflection point come, when the returns from all of this capex starts to actually outpace the capital that you're spending, and the expectation would be, if this decline that one has seen in the capex in this quarter continues to gain traction and the decline happens in a more material way going forward, then you would probably see that inflection actually happening. But at this point of time, obviously, it means that return ratios, the ROEs and ROCs of this business have continued to remain at sub 10% levels, precisely because of what you said, that while earnings growth is extremely strong, it is also being accompanied by an equal increase in the run rate of capital allocation across segments.
Individual businesses, let's get in your take on Jio as well. And how would you look at the overall ARPUs, the fact that margins this time around are a bit flat? What would be your overall outlook on the subscriber additions in light of the competitive intensity and where Jio stands?
You'll have to forgive me that I hesitate to talk too much on Jio, because there's a telecom analyst that we have at ISEC who sort of covers it more explicitly. But just to sort of paraphrase him, I think he remains fairly optimistic about the traction in ARPUs going forward. I think the base case that we have builds in quite a substantial traction in ARPU going forward, because of the fact that the enterprise and the fiber to home business is starting to pick up traction. And at a certain point of time in next year, we would expect that all the 5G investments that have done, and the fact that they've managed to migrate about 90 million subscribers onto 5G, then the tariff monetization in terms of monetizing all the additional benefits that you're getting from moving to 5G, those will start to reflect in ARPUs. So our base case, I believe, builds in around a 35 rupee plus improvement in ARPU over the next couple of years. And whether that happens in the next 3 months or in the next 6 months is something that we'll have to see. But I wouldn't be too worried about the Geo's numbers in this quarter. I think it was fairly in line with what the street was building in. So that's how we are looking at it.
And what's the outlook on the stock price?
Sorry.
Outlook on the stock price?
Yeah, so we've had an ad rating on the stock with around a 2,600 rupees fair price. We've not released our result note as yet, so we are reviewing our numbers post. This is this Saturday as a working day has obviously come as a surprise. So hopefully we'll have an update, but we remain sort of neutralish to an ad on the story as of now, because we do believe that the fair price at 26 to 2,700 bucks does factor in the kind of traction in earnings growth. But then the risk reward becomes balanced because of the factors that I said, that the FCF yield and the return ratios do remain limited for the next 2 to 3 years, given the capex and the kind of capital allocation that the company continues to do in several businesses. So that's the kind of record that we have.
Appreciate your time. Thanks so much for joining in. That's an ad rating on Reliance Industries. The stock price in the spotlight as we speak at 27.30. Okay, let's